What's up, gang? Welcome back to the one and only Pit. It is I'm very excited for today's episode. We got maximum horsepower loaded up, ready to go. So first of all, let me welcome y'all back. Say what's up to my main man co-host, RT. How's it going, dude?
It's good, man. I went golfing today, so I apologize for volatility, but that only happens if I take some time off. So there you go.
We
Had
did
a
it,
wild
dude.
day, but I hit a 97. So sub 100. I'll take it.
Is that good? That's bad? I don't know.
It's very It's just okay, but I'll take it.
And then we got my fellow equine brother, Senior Cantor Clark, aka Ryan, aka Horse. What's up, dude?
What's up, guys? I'm happy to be here. Yeah, I retired the Cantor Clark moniker. Just feel like needed a change. So, but yeah, let's get into it.
Yeah, let Clark have his privacy, dude. So I'm just horsing around here. I'm gonna put on my normal face, and there we go. Cool beans.
Tostoshi back.
Yeah, I'm here, man. So, guys, I figure we could spend a majority of the episode talking about how we all got into trading and why we are the way we. No, I'm just kidding. We're gonna do an overview, dude. It's market overview time. Yeah. So, if Coach Papa Vic could pull up the charts, we got a whole lot to talk about. It's been insane. No, not really. It's been trapped between about 31.2 and 30.19 or whatever. So
it's been insane if you're on leverage, which generally the market is, but when you're on leverage, everything turns up the heat. And I think this is a surprise move for a lot of people. Not like, I did see some analysis, and really up here the other night, I was just thinking the reason I didn't take this short here, much to my regret, is because I just thought the odds of these highs not getting swept before the move I was trying to catch were really slim. And then after this came, I was like, oh, I guess I missed it. So I was not shocked, but a little surprised to see it go all that way up this morning. And then, of course, I was going golfing this morning, so I woke up around here, and I was like, oh, that's crazy. My spot rebuys were okay. I nuked them at range highs once we lost them. And then last night I kind of rebought. And then I was like, okay, they're up. I'll just hold it. I had to stop at the lows. So we went full circle today. It was pretty wild. But again, no leverage for me. Just that spot rebuy and then restop. So pretty minor paper cut today. Otherwise, I just had a good laugh. I was out there with Smeety Boop, who's been on the stream before, and we were golfing, and I was just like, of course, it's the most volatile day of the last little while.
We got news, right? But Senior Horse, something, right? We got news this morning.
There was the jobs data that came out, and treasuries took quite a jump. I mean, if you look at
that explains the Darth Maul this morning.
Yeah, I think macro might become a little bit more relevant again. The idea of maybe inflation picking up again is something that's gaining a little bit more traction. But that was what sent the ES and the NQ packing today. I mean, both of them have already put in considerable moves, and now it's a question of what Powell's going to do in the face of those rallies. But I think BTC got kind of overheated this morning. Overall open interest levels weren't that significant, but relative changes in open interest always matter. So this morning into the highs, there's quite a significant pickup in positioning on the long side of things. And it's not like we broke through a level. It's not like, that positioning was necessarily warranted. It was kind of out of nowhere. It wasn't like a major short squeeze or anything like that. It was mostly perp driven, and it was into the level, not through the level. And a lot of the times when you see that, and again, there's no catalyst, there's no spot bid that's following, it's only a matter of time until the market starts to trade back to those levels and really test those, test the intestinal fortitude of those buyers. So you end up just completely wiping.
Yeah. I want 29 or 29 to 29.3 is I'll buy that, but I've been mostly out since 31.
Yeah, you've been the tax man for a little bit, kind of quiet.
Yeah, dude. Yeah, man.
You get that
It's been
done?
nuts. Very close, dude. Very close to reconciling 80,000 plus transactions.
Oof.
Caught up on Succession while I did it, so
Nice.
wasn't too bad. Yeah.
So wait,
There you
are you active on Twitter? Because I feel like if you haven't watched a show that has already ended, like you have to stay off of Twitter.
Yeah.
Yeah.
Well, you know, I definitely have heard people talking about it, but it didn't register just because I was so far off from what happened at the end of season 2. And then I was pissed to find out that it was over at season 4. I was like, what the hell? Welcome back to the Succession Talk podcast.
It was a great
Yeah.
ending.
It's been lonely.
I
since
watched
the
4
show.
episodes of that and then didn't like it and turned it off. But now I
It
keep
rocks,
hearing
dude.
about it. And in retrospect, I think it's because it was like right around when FTX collapsed. And I was like, I don't need any more negativity in my life.
Yeah.
And
No,
I
you should
signed
check-
off because it's kind of snaky, right? Like it's like people
Yeah.
just being nasty to each other. So
It
at that
is.
moment, I didn't want to be part of that. But
Some of the best comic characters in a drama ever, though.
yeah.
What Ryan, what do you make of the kind of what I've been expecting for a while, just macro, is that just H2 is gonna suck. And I've been kind of trying to be in trader versus investor mode since bottom, and really sort of calling this a suckers rally in a lot of ways, just because we can make a lot of money, but I feel
not
it
the
is
one.
going. Yeah, there's going to be something awful this way comes. I have an open bet with someone in our Discord that we'll see a negative 40 24-hour period, negative 40% on BTC before the next halving.
That's a big move.
What do you think about H2? Do you think that's when all the sort of macro doomers get proven right, or what's your thoughts?
I mean, so I was really intent on just signing off in May, and
Yeah.
I had said like numerous times, like sell May and go away is historically in legacy markets going back to 1962, just the returns from May through Labor Day they're poor. So it kind of just makes sense. Like for myself, being someone who's like more of a shorter time frame, higher time preference trader, I want to be in the market when there's a lot of juice to squeeze. So, sell May and go away has always been something that's not necessarily precluded like lower prices as much as it is like people step away, volumes dry, liquidity dries up a little bit.
A harder
obviously
market to trade.
There,
right?
yeah, and the anomaly is obviously summer 2020, but that was because people couldn't do anything. They were locked in. It was kind of like it was the only show in town in markets. But honestly, I think absent the Larry Fink catalyst, I don't think that the market would be doing anything really that exciting. I mean, maybe we would have had another test of the high, but I think that the ETF and you were saying this earlier, RandomTask. I'll just call you RT. How about that?
RT works. Yeah.
Perfect. You're echoing the same sentiment. Like I think the ETF is largely priced in at this point. I do think like confirmation of the ETF is probably a buy the news, and then a listing is a sell the news. But I can't really see. I mean, this was a nice catalyst. We're at a really sticky point in the chart. It's kind of still lining up historically with the overall just cadence of the market cycle, where we're close to the halving, but we're not at that point yet where I expect us to just melt up. I think we have some more shit ahead. Excuse my language,
pain.
but we have possibly that, when the market moves up, like people forget all the things that literally were negatives just prior to that. And one of them is worth paying attention to. And it's possibly like the Binance DOJ indictment. That's possibly on the table. It's not like that boogeyman has gone away. BNB is like a $37 billion asset. And I think that kind of represents a little bit of overhang in the market as long as that asset exists and Binance is kind of in the crosshairs. But we'll see. I mean, listen, I think that this period of excitement is going to abate and we're going to be more range bound and chop a bit. And like you said, and my idea is like coming back Q4 is probably a good time to come back, not come back, but to really at least just mark that time off and be free.
Yeah.
So
just playing around with Elliott waves here. I did think of this earlier in the year. I'm not really an Elliott waves guy, but I watch for like the more higher time frame cycles of it. That 1, 2, third wave, and then we got the fourth, and then I was like, we're going up. And then you kind of, you want to watch those highs for exhaustion. And that's often where the move ends and it gets really bullish up there. And I will be the first to admit, when we were pushing up there on whatever it was, Tuesday, I was a little weary because it was going into the holiday. Monday night, it was going into the holiday. It was, full moon. There were some reasons to be like not too excited about a whole new move, but I did get pretty excited at the highs and start posting on Twitter like, oh, popcorn, get the aggro out. But the fact that we did make that high this morning and there was just no follow through, like momentum already negative, momentum rolling over, like volume abysmal for breakout. I just got to think that, first of all, that's a savage fifth wave because it didn't give you any new highs really to work with. It was like a 10-second high. And then what does this correction look like? I don't actually, like I said, I don't do Elliott waves enough to know exactly how an ABC would look, but generally speaking, you can watch for that. And if you guys haven't familiarized with this stuff, it's really fascinating. CFX is one that I spotted earlier this year. Same kind of thing, where you just get that
Chinese
full cycle.
Ethereum, dude. Let's go.
Yeah, you just kind of get that like 1, 2, 3, 4, 5, and then you can kind of say, okay, we've had a bit of a cycle here. This thing's probably ready to cool off, and then what does that look like? Like an ABC. So CFX is actually coming into the level. But anyways, so just playing around here. The only other high time frame macro type analysis that I'll do technically is these GANs, GAN squares. And this is one from last cycle. Since you haven't been on the stream before, I'll just share this with you here. I don't know. Are we calling you Clark or Ryan?
Just Ryan's good. Yeah.
Ryan. Yeah. So like if I don't know if you're familiar with GAN squares.
Yeah,
they're tough to trade off of. Like, you're not going to necessarily have a setup that works with this, but as far as like positioning, higher time frame stuff, drawn off the 2019 lows, drawn to the 2019 high, and then it extrapolated basically the entire bull cycle. And it's crazy that it peaked at the top. So FTX low came in at a horizontal that it's just playing off these lines so well. So I've been watching this closely, and like more and more near the end of it, because I was like, holy shit, I forgot about this thing. And we've just been riding this angle up, which I thought was interesting. And then I made a new one for this next cycle, again, drawn off the FTX low, coming into the April high. And I was like, let's just take a look at that. And as you can see, just rolling down that angle. And then as soon as it breaks through, teleports right to the next angle, the arc, and then up to the angle. So I've had these up now on my screens, like my tabs, for a little bit. And they're both just chilling on totally different angles for totally different reasons. So I'm expecting resistance here. I did get excited at the highs after that daily close. I was like, oh, I guess we're going. But the higher time frame kind of analysis stuff that I see is very much like you said. The other hint is we got really negative reaction to the SEC kind of having an issue with their first filing for these ETFs. And then the ETFs were refiled and it did nothing to price. And so those two things kind of in concert are signals that the news that presumably pushed us to where we are is now priced in. The market is comfortable where it is for where those ETFs are at. And until we have a new catalyst, we should be pretty choppy or following the typical seasonal shit, which is just kind of like, cycle wise and season wise, we're not really in for a mega party. And like you said, it is the toughest trading of the year typically through the summer. So I'm pretty comfortable retreating a little here. I'm 50% back to cash after we lost the range highs the other day. And I'm not really FOMOing at all into anything, like worried about missing anything for now.
Dude, you're going to miss out.
I know.
See you at 100K.
I know. I was suspicious of those highs, like I said, right? Like getting those highs, not taking any liquidity. I was a little suspicious, but now that we've taken it this morning, I'm like, now this whole range is at risk, right? At the very least to the low of it, which I guess I could actually pull up the range while I say that. But, the entire range now becomes back in play because we've kind of properly swept it. So At the very least, that's, like you said, 29.5. The bigger level, and I've seen this kind of floating around a bit, is like that 28.5. It's an old range EQ. Also happens to be this big Gann horizontal that I would argue is why that is even a level. I mean, this thing created the support and resistance through the last cycle, and now it's here. So 28.5 to me, 28.350, like it's kind of where I'm leaning for my redeploying a spot, unless we get like a big range sweep or something fun.
I personally don't see us going much lower until 32 gets tapped in some way.
Okay.
Whether that be going straight up from here and rejecting, which is, if we don't get some kind of pullback for people to get on board, I expect that a move to 32 would be a fade. Or if we do get that pullback, we go to 29 and then, maybe we sweep 32. But I like that order block from 2022, like it's just sus. You don't see us
for
going,
reference, guys. This is what he's talking about.
Yeah. It's just like I don't see us breaking that range EQ and rattling the highs from earlier this year, only to not go to 32 at all and just kind of cuck here. That just would seem incredibly odd from like a staring at candles perspective. I don't know. What do you guys think?
Well, without getting too bearish, because again, I was away this morning, so I'm feeling a little bit like, oh, I guess it's
You're bullish at the top, bearish at the bottom. What are you doing here?
Yeah. Well, I was bullish there because it just that the hourly close at 11 p.m. that night fucked me up. I was like, oh, it closed higher. I guess we're going. But I can't get too bearish here, I guess, because daily trend, we're just testing my EMAs, which are typically in a daily trend where I like getting long. We are at the range EQ that you're discussing. And yeah, from this perspective with these lines on this chart, I see exactly what you're saying. But I'm mostly just like, I really want to be more like Ryan in the sense of like chilling out a bit this summer. I've been wanting to, and I've been seeing setups come in and taking them, but I'm trying to not get too hungry at the very least, because September is often giving you an entry anyways.
Yeah, I think like you always just want to obviously be in the market when there's a lot of fat pitches, and this market is so insane that it's easy to assume that is just going to always be a long continuous period. But right now, I mean, I think the last fat pitch was like, it was buying the first time that BlackRock and ETF were in the same sentence. So a couple weeks ago now. And before that, it was like buying the 20K test. But I don't see any like fat pitches right now. And it just, I think this is like where we are now in the cycle. If you've been around for multiple cycles now, this is, that one, this is like, it's a concept of big ships turn slowly. This is something that it's probably going to range a little bit more. There's no new real retail in here right now. So where we are right now, where we're finding resistance, I see it as not only for structural reasons, because this market trades very technically, which means that like levels that really don't mean much in legacy, unless we're trading through like major contextual levels. But like the sticky points on the chart in this market tend to work as support and resistance because a lot of people are just using technicals, but also because we're like 2x off the lows. So from a reasonable profit taking standpoint, you would expect that as the market continues to move up without really any new influx of retail, the remaining participants are going to peel some off. And a lot of time, this market is really slow to digest and to digest new information. So you get what begins as a trickle and then a really sharp move because everyone's trying to exit at the same time. So I see like this region as a place where it makes sense for us to slow down for multiple reasons. Without new retail, there's no like passive bid in this market, which is what an index, or which is what an ETF will be great for, is, you'll be able to add it to legacy products and have sort of that passive indexing flow that is seen in legacy markets that crypto doesn't necessarily have unless you have diehards buying into it. But this area just makes sense to me. I mean, from a cycle standpoint, just in terms of prior cycles and prior cycle symmetry, there's no real reason for us to be racing that much higher right now. It kind of is starting to look overheated it's not overheated from a derivative standpoint, but it certainly isn't the case that it's still like shorts getting overly aggressive up here. As you mentioned, how the market responds to news is
Right.
really important in terms of giving you an idea of overall positioning and who's off sides and maybe who's a little too tight to where they got involved. When we had negative news about the refiling, the market was really slippery to the downside. And when that was sort of clarified as not being something that necessarily people have to worry about or not having an important effect on the overall outcome of the decision, the market was kind of slow to retake those grounds. So I think it's just starting to add up. And one of the things that I look at is, and I've always looked at the options market because one, I think it'll grow. I have a legacy background, so I came from trading equity index futures. I was trading crude oil before crypto, but I was trading equity index futures for a long time. And a lot of the flow in the ES or the SPX and in the NASDAQ is going to be influenced by the derivative market. It's going to be influenced by the options market. The S&P absorbs more optionality than any other product. So I think as the options market and this market grows, it's going to be more important to pay attention to. And also there's a filtering mechanism because people that are trading options are usually a lot more intelligent, I'll say. It's a more sophisticated product. There's more ways to express yourself.
Is that true over the last 6 months? Because aren't people just aping ODTE?
Yeah, but there's a lot. So the ODTE thing is interesting because there's a lot more selling by funds than actually anything else, than there is actual retail reaching for that. And I think that's important because I think a good sign for when equities will be in trouble is when people stop buying the underlying stocks and start reaching for calls instead. But I don't think you see that right now. But one of the things that is worth paying attention to in this market is the options flow. And there was, leading up to the ETF and after, there was some pretty significant block trades, just long calls, not spreads, very directional, that have since begun to temper. And we've actually seen the opposite. We've seen a good amount of call selling and a good amount of put buying again. So, I mean, this is block buying. This is not like, your odd lot retail. This, along with a little bit of overheating in the perp market, but nothing substantial. I think there's a ton of reasons and a bunch of confluence as to why we're due for some kind of pullback. And without new retail, this market's not going to start screaming away from here because you don't have that herd. It makes sense to collapse back into air pockets that we create. So below 29 down to 27, it's not like that move has a lot of meat to it. The more recent move up from on behalf of the ETF, that's bullish, but you don't want to misinterpret what's bullish for the long term as something that is going to necessarily be bullish for the next few months.
Yeah.
So that move looks like something that just gets filled out,
Yeah, filled in rather.
Yeah, exactly.
Bring it back in. Yeah.
So,
and that would make sense. So you look at a summer, from an expectation point of view, what we both were kind of watching for post May was shouldn't be that exciting, right? It makes a lot of sense in retrospect. ETF gets announced. That's huge. Send it up, squeeze all that, short interest, whatever was there. But, stalling here and now having swept and rejected, I get uncomfortable trying to be too bullish during the summer here now.
What gets Ryan, what gets your juices flowing in this space? What excites you? Is there an element of this that keeps your interest in this sort of boring or choppy range bound year? Is there things that you're looking forward to in the next cycle, presuming it happens? What really excites you in this space?
I mean, I guess from a high time frame, it's just a bigger picture view. It sounds overly simplistic, but there's nobody alive that was around at the beginning of an asset class right now. So first commodities, first options market, first derivative market, stocks, all that. So I think owning a piece of that, some part of that, what is Lindy during that, more importantly, and making bets that are, tail bets is something that'll pay off, especially when, I always quote this, the concept of old science or new science progresses one funeral at a time. There's a lot of people that bet against crypto, and most of them fall into a similar demographic. The people that are for crypto are all your younger crowd, and the people that make the future and carry things forward into the future are the younger generations. So I think like long-term view, when boomers die and millennials take on that inheritance and are shaping the future, it's going to be a choice between prior stores of value, prior, ways to access risk, and crypto represents, depending on what it wants to be, it's a chameleon at times. You have your store of value, you have your digital gold. I mean, shit, Larry Fink literally said yesterday that Bitcoin is digital gold, and that guy's a kingmaker. BlackRock is the largest asset manager by far. And now you have, I think in total, like 10 different entities that manage $37 trillion worth of wealth, now suddenly trying to list ETFs. So big picture, it's like, don't lose the plot. So always own a piece of that. Don't get shaken out by the short-term moves, which is easy for me to do because I'm a more short-term oriented trader, but I obviously I've been picking up spot quite significantly prior to the FTX nuke and after. But another thing is, like, what keeps me interested is knowing that this is still, until you have that larger penetration in global markets and listed on the same platforms and on the same exchanges and traded along those products, and held in the same esteem, until you have that, it's still going to be a less efficient market because it's not worth it to be here. It's thinner. The size of this market is the size of, Apple, right? A little bit smaller than Apple. So it's the easiest poker table to play at as long as it's inefficient. And if you're a trader, I mean, that's all you really need to know. Like, if you know that a game is really easy to play in the casino, like, why would you go play at any other? If you know a slot machine is broken, why would you go play at any other slot machine? But then it's a matter of knowing, like for me, more importantly, you have to know the market you're trading. So know when it's best to be in the market. What down to the more granular stuff like time of day, market microstructure, knowing that, for example, the summer is a better time to take off than after Labor Day. So understanding seasonality and all these things. And so this market is going to be exciting for a while, I think. I mean, it's definitely, it's going to be tougher now because it's on the main stage. Like, regulators are all over it. But it doesn't mean that it's going to not yield awesome returns and still be a great market to trade. No, it's just going to be slightly more controlled. And I think, honestly, you do have to consider a longer term view. More importantly now, because where we are, with more regulation, I get it. Like, there is like an ethos in this market that is against that. And, I have a traditional trading background. So when I came here, I didn't really buy into all of that. It took me a while to, but now I get it. But with more regulation, you'll be able to have those flows that you want here. You want those sovereign wealth funds to just like passively index into this market and buy up BTC as part of like rebalancing a portfolio over time. And you want that pension fund to come in. You want literally your parent, like the joke is like Thanksgiving conversations. You want your parents to feel comfortable enough to just be like, yeah, of course you buy some Bitcoin. Of course you buy some crypto. It's part of a healthy portfolio. Meanwhile, like their asset manager or their financial advisor doesn't know shit, because they usually don't. But they're just starting to list it in their suite of products. So you want regulation.
It's the new
for that.
60-40 staple.
Yeah, exactly. And like, we know 60-40 is garbage now, but you need that spigot to come into this market. Otherwise, we're just playing with ourselves. We're just trading amongst ourselves, and it'll remain to be PvP. So I'm excited.
Yeah, we've been pretty pro
and
regulation on here over the years.
I love regulation, dude.
Gunny and I. Yeah, I mean, it was typically a negative catalyst for a while because it's, Gary Gensler and that hard-handed approach with no real logic. Come on in and register through. You can't, but go fuck yourself. Like, it was just stupid.
Right.
But long term, it's always been our view that you want that regulated money in, and there's more trillions on the outside that'll come in if it is, versus the billions on the inside that would leave if they were forced
Sounds
to
like
KYC.
RT loves the police.
Right.
Yeah, no, we had I was going to say, we had some guys in Chicago that were kind of like, they want to trade Bitcoin, but this was like 2018, but they say to their boss, like, they'll get fired for that. They just be like,
Yeah.
what are you, stupid? You trading your prop fund? You want to go over to see Bitcoin? Like, and now it's kind of becoming cool. And for a little bit there in 2021, it was kind of like, if you weren't seeing that coming and you weren't getting involved, you were getting in trouble. So there's a paradigm shift taking place. And generally speaking, it's very bullish. Like you said, people I've talked to a few people more in person that are just like, oh yeah, Bitcoin, like, tell me about it. I'm like, do you think it can go up more? I said, look, it's the size of Apple, and it's a global asset class across the entire planet, multiple countries looking at it very hard. Like, I just don't see a scenario where it stays smaller than the size of one stock in one country. Like, it's a dumber bet to take. So yeah,
completely agree.
Speaking of inefficiencies, the BlackRock news initially dropped here, which is hiding behind us here. Let me get that over. And I remember that morning because I think it was like Watcher Guru. I don't know, some Twitter account that said like they are planning to file for a Bitcoin ETF. And I was like, damn, like, I'm feeling really bearish right now. We had just had this long down run. I was watching lower levels. But then I started paying attention. I was like, that's interesting. And it wasn't until later that night when the Delta, the DB, the guy who tweets out all the inflation data, he went 8 hours later and tweeted out that they had filed. So there was they're going to file, then they had filed. And that's what really created that initial move up. So you had almost 8 hours of that inefficiency in the market, and really like 2 days to be thinking about getting long if you heard that news and thought this is bullish. That just doesn't happen in TradFi. I mean,
no,
any kind of news drop in TradFi, and you're the TradFi guy. I don't trade it personally, but I know it to be so fucking efficient. Even just from watching movies like The Hummingbird, whatever that one was, but the high frequency trading. But like, this idea that like the second you hear news, you look, it's priced in, it's moved.
Oh, this market is so inefficient. Like the fact that you can point and click trade this market on breaking news and still, like, you could break down the chart into like less than 1 minute intervals and look at it on like a 5-second tick or just a tick chart, non-time based periodicity. And you see how much meat is actually on the bone before the rest of the market sort of disseminates that information. You're looking at capturing maybe like a 10% move versus a 13% move, but you don't get that in legacy. You get, if you're on the wrong side of the ball trading like single names or trading indices, like it's gone already. Like you're offside immediately to the tune of sometimes hundreds of points in the blink of an eye. Like if I trade the NQ, I was trading the NQ this morning, and it responds instantaneously. So this market does give you, like, you have a lot, you could just walk into positions half the time. But that's another thing that's troubling, is like people getting bullish late and then feeling like, oh, it's giving us so much time to enter in here. And it's like, yeah, but guy, it's like 50% up already. Like you're getting distributed on right now. It's not giving you all that time. You had a lot of time, but you just didn't pull the trigger.
Too much time is almost suspect. I mean, there's a big confidence issue I notice in newer participants, myself included, where like sometimes news will drop and you're like, man, that's super bullish. And you go look at the chart and it hasn't moved. And you're like, oh. And the mistake then and I've learned this over the years now, about 5 years in, and like early on, I'd see something, I'd look at the chart, and I'd at least want to see like a 1 or 2% move. And I'm like, oh, okay, the market's going to like this. And how many times I just was like, I guess the market doesn't care. And then like 2 hours later, it's fucking mooning. And you're like, man, I just had 40 minutes to get into that trade, but lacked the confidence. And so in learning that, it's been really incredible, because you can see the move, or you see the news, the market, maybe it's moved on a 5-minute candle or something, but it's just recognizing, if you work full time here, if you're at your desk, if you see the tweet, you get tons of time to get in. And then it's later that night that everyone's tweeting about it, and you're like, okay, I can sell now or whatever.
You also have to consider, like,
this year I've done a fair amount of altcoin news pump fading. And I don't like, I understand what you guys are talking about in the context of like BTC or the majors. But when it comes to shit coins, like news pumps are fast, and then they retrace 100% also fast.
Yeah.
Well, there's so much liquidity. Well, it's the liquidity, right? So you have this shit coin. The first guy who sees the news moves at 10% with his $1 million. Like, it's a different beast. But Bitcoin, ETH, and then depending on the market. Like I still remember when 2017 there was coins and I was at my desk and I just happened to see a tweet and I'd look and it was up 10% and I'm like, damn, I missed it. And then it would go 200 in 2 days. Like it's a lot of those lessons. But yeah, the inefficiency here it's a really good point. It's probably my favorite part of the market. Something I underappreciate because I don't trade TradFi, so I'm used to it. I'm like, yeah, we get edge, but
yeah, with TradFi,
don't
it's
look
like
forward to
honestly the real. So especially trading like events, like trading CPI, trading FOMC, non-farm payroll, it's usually that I mean, I've been trading CPI and FOMC now for a really long time, and it's almost like the heuristic is the first 30 minutes is a lie. So
Yeah.
whatever happens in the first 30 minutes, that's usually just really one-sided positioning. The hour after that is usually when you get a little bit more of a move, and then the real interpretation by the market is until like 72 hours out after there's been some time to kind of cool off. But yeah, I mean, listen, there's a lot of news traders in this market now. Like you said, alts are really thin, so it's not like it takes much to move them far. And then it's not like the book really replenishes in some obscure alt the same way it does in BTC and ETH. So there's really not a whole lot that stands in the way back down. You know, it just it folds over on itself pretty easily.
I've been trading CPI and other macro news releases kind of all year on BTC, and pretty incredible how exactly what you're talking about, where the first move is a fade always, and but on BTC it's like the first move we're talking about like 1 minute candles, like it'll shoot up in a 1 minute candle, 5%, and then the rest of the day is down.
Yeah. That happened on our last one, actually. It gave a really nice entry into. That was the FOMC that went into the final low before the ETF. I remember that.
Right. Yeah.
Yeah,
right
there was
here.
a while where I was just I was click trading the events, and the first trade was always mechanical. I would just have a take profit 150, 200 basis points out, looking for that blowout. And then the second move was always way more nuanced. It was like maybe it's going to push up for 15 minutes. It'll fake out twice. And then as soon as, like, when you see a lot of open interest come into the market, again, it's never absolute levels of open interest. It's just relative. So like today, and a good example is actually the BlackRock news, because at those lows, like, we had a buildup of 10K BTC worth of open interest and just very negative delta. So when you have all that come into one very tight region, all you have to do is just consider that like that's where risk is crowding in. It's the same way like when you put on a position, if the market starts trading through your level, like, you're going to start behaving a certain way. And when you have a ton of positioning come into the market after an event, all you have to do is really start trading below where that VWAP is. Like if you put an anchored VWAP on, or if you look at like a TWAP.
Do you want to pull up a chart? Do you want to do a screen share?
I have so I use, I don't know if I could pull up a chart or share my screen, because I don't have like I'm not using a trading view. I'm using Hxro charts, and then I use Sandwich to trade.
Love Hxro, dude.
I mean, I'd love to look at if Victor can plug you in, because you're saying a lot of things that I don't actually have quick access to.
Let me see if I could. So I could share my screen. It says.
Yeah, top right. If you don't mind, if your tabs are ready, because
sure.
I'd love to learn something new today. I'm so used to looking at my own shit, but I like a lot of what you're saying, and I don't use a lot of it.
Ryan, you do ladder trading too, right?
Yeah, so I like to trade off the DOM, preferably. I've always used the DOM in trading legacy. There's not.
That's Jedi shit, dude.
Yeah, but it's in.
Oh yeah.
Here,
okay,
let me.
I'm
going to share my screen and then disable camera so that there's a good amount of real estate.
Nice.
Let's see. Yeah, 1 sec.
I'm getting an echo from someone on the YouTube. Somebody playing their YouTube.
All right.
It's probably
the
you,
YouTube.
Dude.
Can you see my screen now?
Yeah, we'll just flip back to screen share. Vic's just going to set it up.
So what he was talking about was this is. Can you see the entire screen, or I just see a footprint on your chart? Can you see the entire screen?
There you go. Yeah, we're in now.
Nice.
Okay, so on the right, I don't know if it's popping up. There's a ladder. It only looks like I see up to here on that. Can you see beyond that to the right?
No, can't see the ladder.
All right, so it's actually not going to have the entire screen. The ladder is right here. So I was trading the NQ this morning. But this is what you're just talking about. Using this in legacy makes sense. In crypto, it's it's super volatile. You have to change the tick setting to be a lot higher to really get a good feel for the market. But what I'm looking at right now is just when I'm talking about open interest. If you look at this entire range up here, so that's a ladder right there too, but you can't execute off of it. This is Binance. I focus mostly on Binance because that's going to lead by price discovery. That's where you have most of the like fuel come into this market. If you look at this range for the last couple of days, you can see there's kind of a threshold that we work within for open interest as well, right? So you see the highs have kind of been capped off at around 125K BTC. Lows where we kind of begin to exhaust off might be reasonable to assume is actually where we are right now. And it's just looking at overall levels of positioning that are getting involved in this range, right? So when I was talking earlier, I ended up longing yesterday and posting this, no hindsight, but posting this on Twitter. I had longed this right here. So if I zoom in and this, so my chart setting, I don't know if you have the resolution to see it.
Oh,
it's
shit.
not a
Yeah.
time-based.
You get in there. There's a ladder in there.
Yeah. So that's a footprint chart. This is not a time-based chart. This is actually each candle is created by 115 million contracts. So it's kind of equivalent to a 5-minute chart. But if you're looking at a time-based periodicity, there's periods where there's nothing happening, but the candles are printing. So you might have a level of redundancy or noise that it's not really necessary to focus on. Whereas when I'm observing order flow, I only want to see where actual orders are coming into the market. So when a candle prints, it's because 115 million contracts traded. So if there's a lot of candles, it implies that there's a lot of activity at that level. But yesterday I longed because it looked like we had a rebid. So we had a bunch of selling come into the lows. It's actually below where the candles closed. I don't know if it's the resolution's high enough on your screen. A ton of selling into the lows. There was periods where at the low, we didn't go offered. So there's zero prints. So what that means is that as price traded lower, the book didn't follow down. So no one was passively willing to sell that price. That either means market makers didn't follow down or spreads blew out. And a lot of times you'll see like short-term moves be capped by spreads blowing out. So we traded
was
back
interesting
up higher.
Is that on the 1 minute, that was the New York Open, the 9:30 1 minute candle was the perfect low. It was like burgers are back.
Yeah.
And it came up like it was the perfect low. It was sick.
So we traded back to that level, sold into it again. So there were signs of absorption yesterday. It was enough to take a punt. And not for nothing, the move down was really strong. It was unreasonable to assume that the market would just completely reverse like that without first like hiccuping along the way. But this morning, so I ended up hedging and shorting at 31. And it was purely because all this positioning came into the market. So this is mostly derivative led. Meanwhile, spot, if you look at Coinbase, was selling against this. Most of this derivative pricing came into the market above, or the risk that was added came in above 31K. As soon as we started trading below that, I mean, are you going to hold, this was around 15,000 worth of BTC. Are you going to hold like 400 million, 500 million worth of contracts? No, you just have to assume that positioning is going to unwind. But I'm focusing a lot on overall levels of positioning in the market, looking at the most significant contextual levels, because that's usually where people are going to get involved. And then trying to determine where, the market has to go to either force people to get involved, because trading where there are liquidations ends up being a really good opportunity from a risk reward standpoint.
It's the best.
Yeah, either where they're forced or where they're voluntarily brought into the market, so you could assume that people will probably voluntarily enter the market if we trade above 31.5, or if we start trading below 30K, people are probably going to voluntarily hit the bid. But yeah, the DOM is useful trading like the ES and trading the NQ. I look at DOMs for crypto, but you're not trading off of them. I mean, I used to use something called Quant Tower. Now I use, shout out to the guys at Sandwich. This is it has command line interface. It has order execution and portfolio management for all your platforms. I have all the stuff blurred out right now, but I'm connected to exchanges. I have my TWAP. I have my percent of daily volume if I want to sort of VWAP into a position. Scale orders, Swarm, Iceberg if you want to Iceberg.
So you can connect, say, like a Binance, Bybit, and Coinbase all through your interface.
Yep.
APIs.
And so, for example, I have everything blurred out, but I'll move this over. This would normally be like my portfolio breakdown. I could open up multiple windows like this, move this around any way I want. Again, I have a time weighted average price order, market orders. Scaling is very easy. If I want to scale into, let's say yesterday, for example, when I entered into a long right around 30,003, sorry. A lot of times I'll just ape in for half a position. And since I don't want to be in front of the desk constantly now, I'll ape in market half a position, and then I'll just scale in the remainder. And if I get filled, I get filled. So for example, for ETH, where we're trading now at 1884, all I'll do is I'll just pick best bid, and then I'll pick down, depending on where I want to go. This is set to increments already. But let's say I want to scale 5% lower, and then I want to buy, let's say I want to buy 50K worth of ETH, and then in this many clips, and then I'll scale the distribution based on where I want to get filled. Right. So
I love that, dude. This is some hot tooling. I'm inspired, man. I want to learn some of
So
this shit.
Sandwich it's free right now. The guys at Sandwich I was introduced to them by Split Capital, so Zahir, and I've been talking to Light. So if you remember Light Crypto, he hasn't been really active, but
Dude, Light's the OG.
yeah. So this is what they were using, and I'd been introduced to the team. They had asked me for some opinions on what things I think would be useful. And I think they're kind of like coming to market fully with a paid, I think, percent of volume fee. So depending on how much volume you trade, you'll pay based on that. But there's really nothing that, in my opinion, again, from coming from a traditional background, it's simple. Like, you trade the CME products, you trade through the CME. All right. You get your pick of software after that, depending on what you're working with, what you want to pay for. If you have enough money, you'll use something like Trading Technologies or CQG. If you don't, you'll use something that doesn't have direct market access. Maybe you'll trade through something like TD Ameritrade or Thinkorswim. This market's so fragmented. There's so many different products that are coming to the market, different types of software. Some of them are janky, like they don't work well. Some of them connect to one exchange, but you don't trade on that exchange. Sandwich is the first one that is, in my opinion, like as professional as you're going to get. So I don't get paid by them. I'll shill the shit out of their platform for free all day, because I just think there's nothing that compares. Honestly, You know what In Silico Terminal is?
Yeah.
So it's similar to that, but Sandwich is self-hosted. So it's direct market access. If the exchange has any issues, my machine is hosting the platform. I don't have to worry about anything. My keys are not on the exchange. They're not on the web. They're nothing. They're in a folder in my computer. And only I have access to them. So that's obviously really important in this space.
That's dope, dude. I have a question for you, because you mentioned order flow, talking a lot about it. It came up on my feed over the last couple of weeks, and I'm very purist in the TA sense. Like, it's something that I want to learn more about. They don't teach it explicitly at TRI, which is where I took my trading courses, and it works. So I just use it. But I really do want to expand my horizons and get into order flow a little bit. Where would you point somebody? And I've also had a few people ask me this. So, like, I'm curious, where would you point someone if they're like, I want to learn about order flow in, like, even if it's a course or if it's a book, where would you go for that? Or is there just like a particular YouTuber
Talking
who
to the man
teaches it?
himself, dude.
Or is that your
Talking to
thing?
the
Like,
guy.
that's your YouTube. I don't watch YouTube. So if you teach that, excuse me.
I mean, so I don't want to like self-shill, but I actually, years ago, so there's what I tell people first and foremost is never pay for anything to start. I don't have anything against paying for services, but I think that there's so much information out there for free that you should first take advantage of. But find someone who can help you curate that information, because there's a lot of garbage, and if you're like a brand new trader, you should have, it's easy to get like stuck on YouTube with someone who doesn't even trade, and they're like selling you something, and you're learning how to trade from somebody who, again, has no reason to teach anybody. So there's a list that I put together. I created a Discord, and I use the Discord as basically just an archive. I don't even go in the Discord, but I created the Discord, made it for free so that people could go in there, find the resources that I think are useful, like book lists and stuff like that. It's like an archive of information. But I would say exhaust all free resources first. So there's a bunch of free order flow courses or introductory stuff on YouTube. You have things like Trader Dante. So Tom Dante, you have Axia, you have S&B Capital does some stuff, which is a prop desk, but they have a pretty heavy educational arm now. There's a few small accounts like Fat Cat, who's an order flow legacy trader. And again, there's a lot of legacy order flow information out there, but it applies to crypto as well. So you have to understand they might not be displaying this information while trading BTC, but the same concepts apply, or it's the same raw.
Yeah, same as TA
it's the
kind of
same,
thing.
exactly.
Like levels are levels. Yeah.
But I
But
honestly,
what about your course, dude?
I was gonna say,
yeah,
so
self
years
show,
ago,
dude.
I
Like
cre-
I'm all
Come
for it.
on,
I
man.
honestly, I am
yeah.
honestly
So
ready to
years
dive
ago,
into
I
something new.
created I created a course. So I've been getting DMs constantly about like, hey, dude, where did I learn this? So I actually took a month or so out of my time, created a course. It was like, there's like 100 videos and it's free. I made it for free. I gave it away during the bear market. At one point, we were charging for it. I was charging for it, but I was charging like $49. You take the course and that's it. You cancel, you don't have to pay. I obviously, like, I had never been in like the business of selling anything online. I thought like, all right, I have to charge for something because I put in the work. I definitely undersold it after realizing there's like paid groups that literally cost $300 a month. But I ended up just making it free very quickly because I was giving it away for free to some people that would like ping me and I'd be like, you know what? Just take this. I don't have time to answer the questions, but I made the course, take it. And then during the bear market, I just decided to just completely make it free. If you go to blockroots.com, all you do is enter an email address. It's not free in like the sense that a lot of things are free in crypto where it's like you have to sign up through an exchange to use the ref link to get access. It's 100% free. And it's like 100 hours of content.
I love that. Block Roots.
Blockroots.com.
I've been
But
selling things
I'm getting a
online.
no page working there.
But not for nothing. There's no like introductory, like intro to market stuff on it. It's very geared towards if you want to learn order flow and market profile fundamentals. That's it. It implies that you have an understanding of, or you should, price action, how markets work, how exchanges work, how order flow affects the market, the difference between passive and active order flow. There is a degree of knowledge that you have to come equipped with. But I mean, listen, there's a lot of garbage out there that I know that is worth knowing, but I don't have any interest in trading using it. So it is very specific, but again, I think it's pretty comprehensive. It's like a holistic view of order flow. And then
that's
honestly,
awesome,
like,
that's exactly what I was looking for. That's my summer.
at the point of learning anything, you just have to get out there and click. Like for anyone who's new, just go lift an offer, go hit a bid. You're going to get more from that feedback over time than,
and don't forget, TradingView has paper trading is built into TradingView. If you ever want to just try some new shit without necessarily risking all your money, guys,
do it.
Everyone smart that has ever taught me to trade or told me about trading says start with paper.
I can't recommend Ryan's course enough. I think he's vastly underselling it. And as someone who's sold products online for, everything I have for most of my career, I would say, yeah, you drastically underpriced it in the beginning. And people who don't pay attention. That's a simple fact.
Yeah.
And I think, anyone watching this, if you're going to go take block roots, imagine you chilled out, $10K for it. Treat it like that.
That's actually why Beamish sells his course. He's like, I don't need to make the money off selling TRI. I just don't want people coming in and half-assing it. He's like, I want you to put $1,000.
It sounds like a cop out. It sounds like a marketery cop out, but it's like,
pay attention.
It's true.
Yeah, in my competitors in the space I'm in, I charge, a 20th of what they charge. It took me years of doing that to realize, like, yeah, it sounds like a cop out, but it's actually true. Like, it's totally true. So yeah, it's insanely valuable what you've put forth, and anyone watching now should check it out. I myself throw in a little bit of order flow. I love what you're doing on Hxro charts, taking time out of the equation. I do that with scalping and like scalping ticks and stuff, but never thought to do it with the order flow. I use bid ask profiles a whole lot. Just to spot like trapped traders whenever possible. Exactly. And that's really cool, man. Tons of tips, not only like gotten through this stream, but also through that course. So anyone watching, check it out. Don't undersell.
I appreciated your commentary on the ticks today, because I never really, I don't learn tick charts, I don't trade them, but the idea of like, candles are printing when nothing's happening, like at the candles I
Yeah.
look at, and you're kind of like, nah, I only want to see it print when there's action. And that finally had an aha moment for me for tick charts. I was like, you know what? I think it's time.
Yeah.
I was already it's funny that you're on today, because just this week, Altcoin Psycho, a couple others were talking about order flow, and it kind of caught my attention. I was like, yeah, you know what? It's time I expand my horizons a bit, being through the summer that I don't want to trade too aggressively. And
I
here you are. I ask you about honest, no idea you had made a course about order flow. You're like, well, I actually made a course about that. So that's perfect, dude. I'm going to check it out.
Cool, man.
I
Enjoy
appreciate
it.
I'd
that.
even argue that like 80% of the time, like a lot of the time when you're trading, time-based rotations are like a psyop. Like it's very
They are.
easy to
Yeah.
yeah.
You don't get the
Go-
idea of like the level of speed in the market. Like, for example, if I'm trading the NQ and I'm trading the ES, I'll look at the market in a tick-based chart pre-market and then change the tick setting just for the level of activity that comes after the market opens.
Yeah.
So you see, especially if so tick-based chart is based on trades, but the chart I was sharing earlier was actually the periodicities are based on volume. So you'll see like how much liquidity there is also, because when you have a bunch of bars printing, either moving up or down, or actually when you don't have a lot of bars printing and prices covering a far distance, it just means that there's not a lot of work required to move price. Whereas when you get to a sticky point, it visually is a lot more obvious, because you see, oh, okay, so the bars are standardized. They're based on 10 million contracts, 100 million, whatever. And now we're printing a lot of them. We're not going anywhere. So it very quickly makes it easy to see absorption, along with other things, obviously, depending on what level you're looking at. But I don't know a lot of people that, coming from trading legacy, I don't know a lot of people that use time-based charts other than for high time-based, like an hourly chart, a daily chart, because those levels are significant. But when it comes down to looking at the overall speed of the market trading intraday, unless you're using like a 1 minute chart or 3 minute chart, you can't really capture what you can capture on a tick-based periodicity.
I think you also hit it perfectly with the term effort, which is like time-based rotations hide effort. You have to extrapolate it using other tools. And with ticks, with basically, like I think of it as like you have time, you have volume, you have price. Time-based rotations mostly give you time and price unless you have other indicators. And a lot of the inferences that you want to draw come from price and volume.
Yeah, exactly.
So yeah, I'm a big fan. Although I still trade 1 minute charts because I'm an idiot. Well, rock and roll, dude. Damn, is Archie frozen? Oh man.
I wasn't sure if he was just staying really still. I thought he was going to say something.
Yeah, dude. Archie's in a staring.
And then I'm looking at a piece of toast with a mouth and eyes, and I'm like, all right, do I look him in the eyes?
That's
like,
the normal part of things.
Yeah.
Here, I'll share it up. JIC. Ryan, I wanted to ask you, in the last cycle, did you do any on-chain stuff? And if not, are you going to be doing it this cycle?
No, I wasn't. I know where my area of competence is. Most of my trading was on centralized exchanges. I took some punts, but that's not my forte. Like, I can't spot the next hidden gem. I'm much better at, I guess, chasing momentum and getting in late, and ideally, capturing a decent bulk of the move. But no, I mean, at this point, like in my trading, I don't feel a real reason to, like, in this market, it definitely pays to be a generalist, like to some degree, because there's just shit going on all over the place, and there's a ton of money to be made in different areas of the market. But it's so easy also to feel like you have to get everything, and you have to be everywhere. So unless we're experiencing a period where there's a ton of overall like broad market momentum, I kind of just stay in my lane, because I don't know like how long those trends will last. Like I don't have enough of a handle on chain stuff. So
yeah, it's interesting because like this is probably the only market, or I won't say that because there are other markets where it's true, but this is one of the only markets where in like the peak of a bull run, you could miss out on 70% of the value extracted from an asset because you're trading it as a static asset with things like like rebase mechanics in the last cycle, like ohm. Like a lot of the people who made it big on ohm, if they had just traded the price and never staked, they would have missed out on like a shitload of gains.
Yeah.
So it's like one of the few markets that incentivizes participation with the underlying from a product standpoint.
Yeah. Yeah, I agree.
Well, cool beans, dude. Beyond that, are you just mostly keeping it like cool for the summer, and then you're looking to get back involved heavy in the fall?
Yeah, I mean, I say that like if the market picks up and it's exciting, I'm here, you know.
Yeah.
I ideally the summer would be a little bit calmer. I mean, I love spending time with my daughter as much as I can. I mean, I've been trading on my own now for going on 7 years, so I've been able to be home. Um, and now being a stay-at-home dad, my wife is a stay-at-home mom. Like I get to spend a ton of time with her. But yeah, I would like the summer months off. I'd like to play more golf. I'd like to spend more time at the beach. But if the market picks up, like I'll be here.
Yeah.
Um, I hope it doesn't, honestly. You know?
You're speaking my language, dude. I can't believe I missed the dad chat. Sorry guys, my power just ran out, and I have a generator. But what I don't have is that battery pack that like bridges the 2 minutes for the generator to kick on. So I'm actually going to get two of those, one for the Wi-Fi in the basement and one for the computer. But for now, we're back. And yeah, dude, I was playing golf this morning. Like, yes, I want to chill out because remember during the bull market and people were kind of like, oh man, I can't wait for the bull or the bear market so I can chill, like so I can take some time off because it gets
Yeah.
so intense and it's nonstop.
Oh,
And every time you fall asleep, you feel like you've missed $10,000 or whatever. And
so draining.
yeah, I feel you, dude. And I am trying to take some time at the very least, like this morning, check in on the market a couple times a day. And then have a plan, right? Have like, what is the thing that I'm watching for to get back so that when it comes and goes, you don't miss it. Like, because I find when I do that, or at least have some like alerts set on levels that I find interesting, and then I know, okay, I can go chill till one of these levels hits. Otherwise, this range, I don't care or whatever. What is it that you're watching for? I mean, aside from time based, you're saying September, get involved, get interested. Is there something between now and then that would change your mind? Did you have some levels that you're kind of like, here's where
Moon cycles. Go
yeah,
ahead, tell them,
yeah,
Ryan.
the next moon
I mean,
cycle.
not really. I mean, I the price is in a place right now where it just again, it's not like the most compelling area to get involved. I think we're kind of far from compelling areas to get involved. I mean,
Mhm.
if we retest 28.5, that's kind of an area where I'm interested in. And I never know what I would do at that level. I just know that that's an area where I think a ton of people will get involved. And I'm a reactive trader, not a predictive trader.
Okay.
If we start trading back above the 2021 summer lows, if we start trading back above those lows and really putting in a platform there, and legacy markets are moving up and we have tailwinds across the board, then my hand will be forced and I'll probably be a lot more active. But I have my exposure at this point. Like I'm exposed long BTC, long ETH. I picked up spot Doge. I picked up spot Pepe. Like I have positions I'm comfortable with. I hedge around that. I try to remain nimble, but I know that it's really easy in this market to look back after a cycle and be like, ooh, I probably could have just bought and held a little bit and relaxed more. So I'm trying to exercise that during this summer. But if, again, so the way I look at it is the ETF is a positive catalyst, but we have, what is it? The decision is in August. So what is it? August 16th or 15th for the first of maybe many SEC responses. I have to clarify it on my end because I can't recall it from memory, but if we get, one thing is if we get rejected, which would blow my mind at this point because Larry Fink on TV talking about it kind of means it's in the bag.
Yeah.
If we get rejected, like the market is really one-sided right now about it getting accepted. So that would be a really ugly situation where I could see us testing, 20K again, testing lower. And then you have the Binance DOJ sort of other shoe to drop possibly, which kind of I feel like is going to come at some point.
And Grayscale.
Yeah, that's another thing too. I mean, the Winklevoss twins and Grayscale and DC, like all that still exists right now, but it was easily forgotten because we moved up, you
Yeah.
know? So there's a lot of people right now that have to sell, there's lawsuits going on, there's money that needs to, there's assets that need to be liquidated. And that still exists. And as long as we have that overhang, I just think, we're going to chop around. So I don't know. There's nothing really that is standing out to me as like, if we do this, then I'm going to be balls to the wall. But I think it's kind of moving along as predicted, honestly. Like, I think that 2024 is when we really begin to ramp up. I think it's just I think, because here's the thing. I think the halving is like the most reliable narrative this market has.
Mhm.
And this market is so narrative driven. We've been searching for any narrative for like there's any crumb. Like the meme coin period was ridiculous. It was like this market basically saying like it's submitted to the idea of just it's ridiculous. Like we'll buy anything, But I think the halving is a really strong narrative that also has a lot of exposure outside of this market. Like people that don't care about this market know about the halving. And I think that that's going to continue to be reliable. I don't know if it leads to obviously exponential growth. I think it tapers off over time, but I think we're at that period where it's like, maybe chill a little bit. You don't have to worry about every little gyration and move.
And
it's
the
the
key to
summer,
that, I
so
think, is being positioned, right? So you're saying, I'm long-term bull, so I've got some bags. And
Dude,
so
just
I'm
get
not
a
as
tax record that you need to reconcile, and you'll be able to chill.
yeah, that'll take some time off. I'm trying to stay ahead of it this year, but in retrospect, I'm actually just working on it every day forever. But like if you have bags, if you have some positions, you have some higher time frame convictions, and then you just, it kind of it cycles back to something we talk about a lot on the show, which is like have a plan. Be in position. I've got some Bitcoin, like my core spot position. I got rid of it on a stop loss when we reclaimed the range yesterday, like went down 2 days ago. But I've got some Bitcoin in a wallet, like I'm not touching. And even though today, after that rejection, getting home a little late, missing it, I was kind of like tempted. I'm like, but it's like, no, because if you ask me where I think it's going to be in a year or two, I'd be like, well, probably much higher. And I don't want to try to time that. That's too stressful. And
Yeah.
and
And from a
historically
tax
speaking, you're
standpoint,
not going to time it well.
I'm going to time it, dude. All the macro shoes will drop in one day, and I will buy it on 100x leverage.
well,
That's your
if your
40%.
opinion is honestly, excuse me, if your opinion is that like macro is due for some kind of like crazy tail event, like insurance is really cheap right now in the S&P. So if you were gonna like if you look at the VIX, it's still just at lows basically. If you wanted to buy puts and really exercise that opinion, now's the time to do it. Honestly,
Thank
Put
you,
your
because
money where
sir.
your mouth is, toast man.
Dude,
yeah.
no prob. I'm on it. S&P
But the
puts.
problem is
I
like
like it.
that's why it is the way it is, because people are buying it and then the market's just grinding up, and there is nothing that's the market's kind of it knows the boogeyman currently. So there's nothing that a black swan is a black swan for a reason. It's like unpredictable,
No one sees it
and
coming.
there's not a whole lot we're not aware of right now. So
Yeah, I don't know if you like you talked about option flow earlier, and I always think back to Brian Beamish. He's the founder over at TRI that I learned to trade at. He's been on the show before, and he's been in the market 30 years doing various roles and brokering and whatnot. And one of the things I find most fascinating is when he pulls up the options open interest, and whether it's the quarterly or the monthly expiry, and he's like, you know what? This is where the most pain is. Like, this is where the most of these puts will expire worthless that were all written by institutions. And like to the fucking pip, these things just ride up. They make the most amount of pain expire worthless, and then they just dunk it. And it happens so often. It makes me
yeah,
think
OPEC
there's got to be
spending is
money to be made there, just fading that or like anticipating that. So you're thinking
yeah,
maybe
like
like
for
end of year.
that's like that happens during OPEX usually if it's like a crazy expiry, and then you'll just see the market would be pinned, and then you'll have to wait for after OPEX for the market to actually free up a little bit. And yeah, that's like I said, the S&P is ruled by the options market for the most part.
Yeah.
I mean, obviously, is the underlying like Apple's carrying the S&P, the megas are carrying, right? But it's still like the derivative market has a massive sway on the price action. So
And so you really, yeah, like, and how many times I've watched him do it, I still don't quite know enough to pull it up myself and trade off it. But it's like, what percentage of these options are being written by institutions? I think it's something like 95 or something, isn't it? Really?
Yeah, and
high?
80% of options will expire out of the money. So
Yeah.
you're almost always better off, like as an options trader, theoretically holding things to expiry because of that detail. But it's the way that they like to gamble in legacy markets. Most retail, they have access to Robinhood now, and they play those really short dated calls, and that's like free money for the institutions writing them, because odds are they don't expire favorably, unless you have a period like with GME, GameStop, where the underwriters are just buying it up because they have to hedge because market's ripping up, and it's a completely different scenario. GME is interesting, honestly, because the movie's coming out.
Dude, I was like, okay, he said GME. I wanted to bring it up. I thought there's a trade there. What do you think? Sorry to interrupt.
So I have it on a watch list again for that reason.
Yeah.
So I was looking at calls, and I've been looking at maybe possibly buying the actual underlying, because I'm wondering if maybe like that fanfare, that Wall Street Bets, contingent will get excited and buy it. I think that it'll be somewhat predictable a little further into the release of the movie. If we start having some level of positive drift, I think it's like around 24 now. I can't recall last time I checked, but maybe
we're gonna pull it up on screen here.
Like maybe that movie is like this generation's Big Short or Margin Call, and it gets people excited also to trade. So you never know. Like maybe that inspires a new swath of retail to get involved.
Yeah, when I saw that trailer a couple weeks ago, a week ago, I actually watched it a few times. I got goosebumps. I didn't even trade GME, and I was kind of getting fired up for the movie. And then I go look at the chart. I was curious. Oh, okay. Can you close your screen share, Ryan?
Am I still
we're not watching it anyways, but once you close that, I'll pull mine up. We'll just take a look at GME. So I saw that trailer and I thought, okay, we have an event. We have a date. I believe it's something like October 23rd or October 20th, 2023. And I looked, I did go look around at some options on there. My TradFi account is very small. It's like a little IB account, so it wouldn't be significant. But just for the sake of taking a punt, I wanted to, pick up a couple calls. And then I got so spun around because I never know like what strike price exactly, this and that. And then it's like, do you want the expiry, which is actually on the Friday the movie releases, or is it more like post movie? We're going to see that wave. So how do you time it? So I actually just kind of succumbed to maybe buying some of the stock. I haven't yet, but I'm waiting for more of a technical signal. It's moved through a higher time frame weekly trend, just put in a weekly W. So there's some. Oh yeah, okay, I'll share now. There is some shit that I look at just chart wise that is lining up. So I thought that was an interesting trade too to look at. Is it working?
I can't see it, dude. Unless you got a big question mark on your computer.
Yeah, no, okay. We're good. I mean, yeah, I'm with you, dude. Some kind of move off these lows, just purely on a technical sense, makes sense. But with that movie coming right here, yeah, I'm glad you brought that up, because I brought it up to a few options buddies of mine, and we never really settled on anything. But I was very curious to know, what are you thinking options wise? Like a December expiry, catch the post launch mania that might come.
Movie release. It's not like options expiry into an event where it's crushed after earnings. I think when a movie releases, you have a lot of period after that, where it's not always like the first week that it's like blowing out the box office. And not for nothing, what I will say is like it looks like a good movie, but it looks like it's kind of a B level cast. If you had like megastars in it, I mean, it would be I think it would be so much more obvious. But I think that you could get away with, like, let's say this, the movie comes out at, what was it, September?
October 20th, Friday.
Yeah, I think you could probably buy like the December, and honestly, where's it trading at now? 24?
23.04, yeah.
I would probably buy something like some decent out of the money strike, like above 30 at least. But I don't know. I have to take a look further into it. Price action has to start like showing signs of positioning, like into the Coinbase ETF. There was a really odd, activity. The August 18th expiry in coin. It's like the 80 strike calls. There was a really significant pickup in open interest, like out of nowhere. And I'd shared it on my Twitter, like when that happened, and said like, someone's buying a ton of calls in coin, like going out to August, like this is probably smart money front running something. And lo and
This
behold,
August?
like, what's that?
This August?
Yeah.
Okay. Yeah.
So it already traded up to 80. So, I mean, that paid off, that 10x already. Those calls 10x. But it was like, all right, maybe this is, someone is informed. This is like informed flow. With GME, like I would want to see at least some of those out of the money strikes begin to pick up. And if we start to see them trade a little bit higher and open interest pick up, and you start to see again sort of more supportive price action, because right now it kind of looks like it's a dead stock.
Boring right now. I mean, there was
Yeah.
a subtle, what I look for is, you see these on all my charts, is just this kind of reload zone, these higher time frame Fibonacci retracements. And that's like, okay, here's an area I want to think about buying. And then once you're in that area, you want to see some bull divs as you arrive there.
Yeah.
But mostly you want to see the reversal. And we actually did get a weekly W here and then a higher low. So it's slowly kind of made its weekly reversal right now. And it's just chilling at sort of these EMA throwbacks. But, this is an area I'm definitely interested, but I'm kind of with you, especially because I don't trade this stuff too actively. It would be a fairly small position.
Yeah.
I really don't need to sit in it for 6 months here, or whatever it is, 2-3 months. But I'm gonna keep an eye on your Twitter and channel. I'm very curious what you do see, if you see stuff there, because when I first saw this trailer, I was like, oh yeah, there's got to be a trade here. And more for the memes.
Yeah, I'll be vocal about it. So
more for the memes, I want to catch it. Like, again, the account size is less than a Bitcoin, so I'll make maybe $500, but I want to say I did it.
Listen, man, I played the Netflix earnings, not Netflix, NVIDIA earnings last month. And you don't need a ton of money. I mean, if you put a substantial amount of money, obviously you're going to make a ton. But with options, you just have a different level of convexity. I mean, you don't need to put a ton behind it to make a significant amount of money. So it's not like I would put a bunch behind any kind of very speculative play like this on it picking up out of nowhere. But
yeah,
it's a good opportunity, possibly.
Yeah. And as I say that, I can always move a little into that account. It's just that I mostly ignore it. It's like my TFSA just over on Interactive Brokers. But yeah, dude, I'm curious. And I've heard that about options, Hxro Network, founded by Gunny, Rob. They're on the show a lot. They're options market makers out of Chicago. Like, I should know more about options. I've been hanging out with them for 4 years now, but I think I'm ready to take, buy my first call. I just don't know what fucking date or strike to pick, but I'm working on it. So I'm really happy to hear that you're keeping an eye on that, because those guys are too busy. I brought it to both of them last week and they were both like, yeah, interesting idea, but I have a real job. I'm not trying to buy, not trying to help you figure out your GME calls right now, bro. So we'll keep an eye on that one. Otherwise, I've got the hash ribbons up. I don't know if you focus on the hash ribbons. For higher time frame signals, it's been one of the bigger smackers long term on the weekly for Bitcoin. And it did fire that signal back in January 9th. It fired a buy signal, which has paid off really handsomely this year. If you look here, it's still riding. There's no minor capitulation. If we do see a really doldrumy summer, we might get a little capitulation, which would set up the next buy signal. So that's another high time frame thing. If I do tune out here and we pull back a little bit, that's like, I basically just have like a buy some Bitcoin every time this thing fires kind of plan as part of my trade plan. And right now it's fired one signal for this bear market. So 2015 it fired 3. 2019 it fired 1, actually 2. Basically every time it fires, sometime in the next 6 to 8 months, things get crazy, sometimes right away. So this is another signal I like to keep an eye on.
Yeah, with those, I find that those, like, they've tended to be accurate. Like, there's a lot of things that have been on point that I don't really necessarily focus too much on. But you just have to take it with the understanding that there's going to still be a lot of, like, price is still going to be loose around those turns, right? So it's not like a pinpoint accurate, this is going to be the pico bottom moment. It's
No.
more like this is where the ship is beginning to change course.
This is, yeah, like it's one of those, like, this is generally an area to remind yourself that, you know, stay bullish, like keep your mind, your mindset right. One thing we can say for this is it's never fired at the highs. Like it's never been faked out once. I think the closest it came to getting faked out was mid 2021, where it fired after those, you know, that May China ban little mini bear market we had mid 2021. It fired up there at around 41K. To be fair, it ran right to 60, 69, but that was like the only time it fired mid bull that arguably wasn't the best signal. I guess the last thing I want to bring up as far as what I'm watching right now is this breadth indicator. And I bring this up a lot lately. It's on TRI. It's just an algo. It's basically presented as two moving averages. They flip bull, they flip bear. And it's short right now. So it signaled the short, you know, at 12:30. Like, interestingly enough, the day of the BlackRock thing, it fired along, which was a big part of why I put some money back in to get interested, because I was ready to take the summer off. And it got two signals in the midst of that right here, which actually was a winning trade slightly. But it's in overbought territory now, and it just flipped bear. Unfortunately, I think anyone who actually traded it probably got squeezed to shit today, so it wasn't ideal in that sense. But it's short now, and I basically have it updates every day. It's like only once a day. So I've decided to kind of cool my jets until this thing, you know, looks like it's ready to fire. Because as you can see here, like it gets ready to fire before it fires. You can kind of see them converging, and right now they're inversely converging to the downside from the highs. So this has been a really nice higher time frame kind of swing bias setting signal for me. I bring it up lately because I've started using it and it works great. But for anyone who's curious, this is a very strong chill out signal for me personally.
You guys, I apologize, but I got to bail in like a few minutes. I didn't realize the time.
Yeah, no, we're getting late. That's why I kind of brought it up as like a final piece, because did I cut out again?
No, I hear you still.
Okay, cool. Well, hey guys, it's been an absolute pleasure. Let's get back to the main screen. Dude, thank you for coming on today. It's the push I needed to kind of talk and really learn more about order flow. This is
awesome.
You know, I was a teacher for 7 years before I got into trading and crypto. And so I'm all for learning. I'm not going to be that guy. You know, I think the best way to get stuck in the mud is to like stop learning new shit.
Yeah.
On the other side, you know, in trading, if you find something that makes you money, like don't complicate it, just stick to it. But I'm feeling ready for like a new angle, especially because I'm doing a lot more like lower time frame trading, higher leverage trading. So I'm going to dive into it. I'm going to take your course, and hopefully we can have you back on when I've gotten through a certain amount, so we can talk a little more shop.
Awesome. Thank you guys for having me. I'm only realizing during the stream that I was bitten to shit during 4th of July by mosquitoes, because I feel like every 5 seconds I'm like scratching a bug.
You did look a little itchy over there. I wasn't sure. I was like, this dude is in a big trade right now.
Well, my wife. So we went outside like late because we live right on the water, and there's like a bunch of people that put on shows, and like it was a Tuesday, so it was not like, you know, people put off their shows on the weekend. But we go outside, and my wife like sprayed this all natural bug spray that obviously it didn't work. She's like, you spray it around you and they don't come near you in the circle. I'm like, okay, whatever. So sure enough, like 2 days later, I'm like, got these dots all over me. I'm itching myself, but yeah.
All natural is your first clue to mosquito repellent not working.
Yeah, exactly.
I wish it existed. It just doesn't. Yeah, no problem, dude. Absolute pleasure, man.
What did I miss? Is it over?
Oh, yeah, we're done, gone. Damn. Satoshi's back. Yeah. Now I'm down to stick around for 5 and talk some shit.
No, that's cool.
But okay. All right, guys. Go.
frozen and so better leave on. I swap it for time and I fake it for me. More jittery bass in 3 days, I'm on 3, I'm gone. Palomino Patron, cappuccino.